All right. Hi, everyone. This is Pete here. So welcome to another session of the OMI Q&A. Okay, so we're just going to wait a few moments to let everybody come on the stream. All right. So guys, as per usual, you put your burning questions in the comments. All right here. Can you see this? All right. Put your burning questions in the comments. Okay. All right. And those of you are right here with me, if you can hear me, type in hello. Okay, if you can hear me, type in hello. All right, so over here we have Joyce. All right, hi Joyce. We have Esther. Hello. And then we have Chris. Okay, so guys, so what's going on in the market? Like what's happening, right? It was crazy. Okay, what's going on in the market? All right, so basically there were a lot of news, right? There was a lot of positive news. There was COVID, good news. Okay, let me just bring this closer. I think you all can hear me, right? Okay, there was COVID, good vaccine news. There was the Biden administration finally taking over the White House in transition still, right? Right. There were many things. So tonight, I want to answer one of the questions that you guys submitted. Okay, so let me just share the screen very quickly. And hey, give me a second, Right. Okay. All right. I just want to share, to go through the question that you guys gave us. And I think it's very, very relevant, right? Because the market has been going up. So we received multiple questions asking, what's happening to the market? What's going to happen to the end of the year? All right, Pete, can you shed some light? Is the bull market coming to an end? Dun, dun, dun. Right? Is the bull market coming to an end? I don't know. Let's see. So the thing is this, guys. Whenever we hear such a narrative, right, it is important that you don't panic, don't jump into conclusion, but look at the market and make a sound judgment. Okay, make a sound decision. Right? Now the thing is this: none of what I say or what you say is definitely going to be 100% accurate, right? No one is having a crystal ball. Okay, only God knows what's going to happen next. Okay, so what we want to do as investors is to make an intelligent judgment call, an intelligent estimate of what potentially can be happen, and more importantly, how to position ourselves as investors going forward. Okay, so before I start, let me just say hi, right? So wow, so many of you here. Okay, let me just go through a few of you. All right, we have Su Chiu here. All right, Su Xian, Nita, hello. All right, we have Lin, Pollyanna, right? Junjie is here, Ivan is here, Eddie is here, right? Bernie, Kiming, all right, Laju, Prema. Hi, everybody. Okay, hi, everybody. Okay, so let's dive straight into it. Now, okay, guys, general disclaimer. Please, none of what I'm going to share with you is none of them forms investment advice. Okay, so please do your own due diligence, seek your own professional advice if you want to, right? My purpose here is to educate you, but please do not take the easy way out and just copy blindly, because the important thing is this: if you copy what I say, but you don't copy the conviction, you might be in a lot of trouble. So please do your own due diligence, okay? All right, so we are one more month to Christmas, okay? We are one more month to Christmas, and I don't know if you all have heard this rumor before, because some of you actually asked me, hey, Pete, in the month of December, all right, in the month of December, usually the market is very weak, right? That's what I heard from other people. Okay, so people say, hey, have you heard the rumor the stock market tends to fall during the end of the year? All right, guys, so when you hear such rumors, the important thing is don't straight away believe what you see. In fact, these days, online, there are so many fake news, all right, they call it the deep fake, right, where people can put out seemingly convincing news to cloud your judgment, okay? So, guys, when you hear such thing, just go and find out, right? Is it even true? Is it even relevant to you, okay? So, let's go and take a look. So, I decided to dig out some information to see whether this concern from you guys is valid or not, right? In fact, I dug out a 2018 market study, all right, done by what is called market charts, I think, okay, by market charts. And they say, actually, December historically has been one of the most wonderful time of the year for stocks. All right. And they even have a caveat here say, Since 1950, no other month has posted a higher average return than December. Wow. So guys, what does this mean? That means what? You should go all in December, right? Okay. But when I dug deeper, I realized, hey, actually, this is not far from the truth, right? I couldn't find another studies that did 1950, but I found another studies that did 1990 to 2017 for the S&P 500. Okay, it's advisory data, and it shows that actually out of all the Decembers, actually the majority, 22 of them has been winners. That means if you invested at the start of the December to the end, you will have made money if you invested in S&P. Okay, and out of all these, only 6 were losers. So while the claim is not as good as the since 1950, okay, but at least 22 out of 6. Only 6 out of 22. Not too bad. 6 out of 28. Right? Not too bad. The majority are actually winners in December. Okay? Now the thing is this: 2 points doesn't form a data line, right? You need way more data than that. And that's what I do, right, when I invest, is don't just believe what you hear, find out more for yourself, build your own conviction. Okay, guys, can you all type in the comment? Conviction. That is so important. Regardless you're investing in stock market, or you're investing in Bitcoin, you're investing in gold, investing in property, the level of conviction will determine how comfortable you are with your investment. All right. So for me, it's like, hey, I don't think this is enough because they don't really quite add up. So I found another data point. And this time around is a different time frame, right? So it's 1980 to 2018. And it shows that on average, actually, December is kind of like an average month, right? Because it shows here the April return seems to be better, the November return seems to be better, and maybe September seems really bad. Okay. And it's actually true for this year. September was a really bad time, a really bad month for the S&P 500. Okay. So I say, hey, let's just find one more information, right? See if I can make sense out of this. And I found out that US actually have this National Bureau of Economic Research that sounds very cool. It's not Uber, it's called Amber. Okay. It's not Uber, it's not this one. It's Amber. Okay. And what they have is data on economic recession going back to 1857. So I was like, wow, this must be the most legit already. Why? Because it's from government and it's all the way back to 1857. And it goes all the way to just last year, 2019. So I think this is pretty solid. All right, this is very good information. And lo and behold, actually, December is not a particularly good or bad month. In fact, it is average. Can you see out of this whole graph, right? January seems to be a very bad month. Out of all the years, actually 5 times the recession started in January. All right, 4 times started in July. So actually 3 times not that bad. Right? It's kind of average for December. So guys, what do you think? Is December a great month to invest or is it a bad month to invest? What do you think? Can you put in the comments? Right? Is December good or bad? Huh? So is December good or bad? I have no idea, no. Okay. So guys, okay. Hey, Eliza, how? You have conviction, right? So what's the conviction on this? All right, we have Louisa here. Hello, Andrew, Woofy. Hello, Woofy. Okay. So guys, in this case, what is your take? What is the outcome? To me, honestly, this kind of comments out there really is as good as guesswork, right? And if someone ever tells you, oh, a particular month of the year is the best time to invest, right? That statement itself is very hard to realize. Why? Because if that is the gospel truth, everyone will have acted accordingly, right? And not invest in that month. And therefore, that month should actually be the best month to invest because people are not selling, people are not buying. If you go there and buy, maybe you make a big pile of money, right? So I don't really take all this into consideration. I just want to use this first half of the session to show you guys a lot of times, all the pundits out there, the market commentary, just take them with a pinch of salt. If you cannot make a decision, do some form of research. And I can tell you, this did not take me more than half an hour to come to this conclusion that whatever the person said initially is really nothing more than guesswork. Okay? All right, so I hope I answered this question. Take it out of your mind once and for all. All right, the important thing is don't look at the month of the year. Look at what you are investing. Okay, and those of you who just attended all right, the 3-day OMI last weekend, all right, you will know that we kept emphasizing on this. It is not, right? It is not timing the market. It is how you find good companies and stay invested with them. Okay? So instead, I want you all to really put on the hat and think about what is happening in the world actually what is happening to the world, right? And it's this. We have a new US president, right? We have Joe Biden coming up. He's likely to be more pro-China. Trade should be better, right? What else? We have Janet Yellen, which was just announced, all right? She's likely going to be the new Treasury Secretary, okay? She was the Federal Reserve Chairwoman previously, okay? So I think now it's very interesting. She has sat on both sides of the aisle already, all right? And Janet Yellen has said this before. She talked about the need for a bigger stimulus, right? For a longer period of low interest rates. So these are generally pretty solid and good news, okay? All right, what else? But it's not all rosy, right? What are the things that can potentially change the whole narrative? Now, one thing that gets me a bit worried is that the festive seasons are coming, right? Christmas is coming, Thanksgiving here. It gets me a bit worried. Why? Because when people start to gather, start not to follow rules, don't wear masks, you can expect COVID cases to jump. In fact, we are seeing one of the highest cases right now in several countries like Hong Kong, like US, I think even Japan, if I'm not wrong. Okay, so my fear is, hey, maybe the COVID cases might spike up and cause a shutdown again. Okay, but that's a possibility. Okay, last but not least, of course, okay, right now, I'm not sure if you guys are feeling it, but the sentiment in the market, right, people talking about investing seems to be getting greedier and greedier and greedier, right? People are throwing into the investment world as though they would never lose. Okay, so gets me concerned in the short run, okay, because whenever the sentiment is very greedy, then you need to be very careful. Okay, like what Warren Buffett always says, okay, the market, if it's very greedy, when others are greedy, you need to be fearful. Okay, and when the others are fearful, then you should be greedy. Okay, so guys, all right, this is what is actually happening in the world right now, and I just want you to take this in, right, and ask yourself, okay, with this, how can I have a more informed decision when I invest, right? But honestly, what I want to show you guys is this. None of all this here is something you can control, right? You cannot change the US president. You cannot change the US Treasury Secretary. You cannot change the Christmas period. Christmas will always come. People's sentiment is their sentiment, it's not yours. There's nothing you can do. So the only thing you can do is to really look inwards, look at your own investment. Okay? All right? And ask yourself, how about going into 2021? Because if you just focus on the short term, the next month, December, what's going to happen? Then you're going to be very reactive. You'll be reacting on all the short-term news. All right? And like what Aaron says, it is going to be scary. Because if you only react to short-term news, you're going to be swing left, right, all the time. Okay, so guys, the thing is this, ask yourself, can I lengthen my investment horizon and look out into the future just a bit further? Okay, guys, I'm not asking you guys to look out to 10 years ahead. No, just look 1 year ahead. In 2021, what are you going to do? Okay, what are you going to do? And I quite like some of the statistics that I saw in 2021 that, kind of guide what I feel about the market, how I think about the market, and it's this. Okay, now what is this? This is actually the TSA checkpoint travel numbers. All right, that means the US travel numbers. Okay, comparing 2 years, which is the blue one, which is 2019 over here. All right, and the red one, which is 2020. And for the first time since COVID and the travel numbers plummeted to less than 500,000. We are right now, for the first time, seeing this creeping up above 500,000. And more recently, this number is above 1 million. It's above 1 million for the first time. All right. And so this gives me a lot of confidence. Why? Because people are starting to travel again. Of course, this could be leading to maybe more COVID cases. But what I want to say is this. us human as a kind, as a species, all right, we will always recover. Somehow or another, we always find a way back. We always find a way to recovery. Okay, so for me, when I look into 2021, actually, I'm more optimistic, just like these people who are traveling, all right? Just like these people who are resuming back to normalcy, all right? So that's what I'm looking at. The second one is this. While I say the sentiment greedy seems to be the near-term thing, however, when I look at Google Trends, so this is something that you guys can also do at home, all right? You can also do at home to look at Google Trends and ask yourself, are people going nuts about certain terms? So one term that I search is stock investing. I want to see, were there a lot of people searching stock investing like what we saw in March period? Can you see here? Right? It was a spike up in the number of people searching for the term stock investing. All right. And that should get you concerned. Like, hey, if everybody out there, people who have no business talking about investing are also talking about investing, like, oh, hey, should I buy this stock? Should I buy that stock? Should I buy Bitcoin? Then you should be more concerned. Okay, but right now we are not seeing that at all. Right, we are seeing that the trend is continue to trend downward. So to me, that's kind of like a good news that this on the long run, this is still quite controlled. Right, in the long run, this is still quite controlled. Okay, so over here, all right, what I feel may be a little small bubble is this little thing called Bitcoin. Okay, now for full disclosure, I do own Bitcoin as an investment. However, recently the chatter online talking about Bitcoin is getting a bit high. All right, it's getting a bit high, a bit ridiculous, a bit ridiculous. In fact, I have so many people messaging me, PM me on Facebook, on WhatsApp, on Telegram about Bitcoin. That's when my alarm bell starts to ring, because these people have no idea and clue, have not done the research, have not done the reading what Bitcoin is, but they're asking me, hey Pete, how can I get a hold of this thing? Okay, this is where you need to be more aware. Okay, just be more aware. If you are jumping into an asset class, so for those of you who are investing into Bitcoin, I just want to encourage you, right? Don't just run into it because of FOMO. Ask yourself, do you understand the technology? If you don't, please, for a while, pause, take some time to understand. Ask yourself, do you have the conviction in it? Ultimately, it's back to the word conviction. Because otherwise, if this is another Bitcoin bubble, causing it to be like the previous one, where it went up to $20,000 and it dropped all the way down to $3,000, that's where you will lose your conviction and start to panic sell. And you will have committed the worst sin in investing world, because you invest on the high, you sell at the low. That will be the worst sin. So guys, all right, please do not just copy out there what people are doing. Please also have independent thinking. All right, guys, those of you who understand the importance of this, type in the word independent. It is so critical. Okay, so right now, let me just take a few moments, answer some questions. Okay, let me see. Okay, so yeah, so David is saying, all right, don't bother to time the market. All right, or Kevin, a bit more honest, which I like. Kevin is saying, take it with a pinch of salt. All right. Take it with a pinch of salt. All right. Yeah, Edwin, this is one of my favorite phrases. Time in the market beats timing the market. Okay, definitely. All right. And Jaslyn got a very good question. Jaslyn asking, should we stay invested in the tech stock or do rotation as per what many articles recommended? So the thing is this, once again, boils down to independent thinking. Personally, to me, there's no such thing as rotation. To me, I don't believe in rotation. Why? Because if you rotate into something you do not understand, actually to me, that is risky. Right? For example, if you understand the tech industry very well, and that's all you do, and you do not understand, let's say, other industries like oil and gas, maybe car industries or railways or other kind of sectors, right? But you say, oh, because the article say we need to rotate our stocks, and therefore you rotate into those, to me, that's risky, because right now you're committing another sin of investing, which is you're investing in something that you do not understand. All right? So Warren Buffett has a very good friend called Charlie Munger, right? And Charlie Munger always says this. He doesn't have any investing superpower. All right? But he said his ability to stay within his circle of competence save him from making very bad mistakes. Okay? So For me, it's very simple. Charlie Munger is such a smart guy and he understands the need to stay within your own circle of competence. Now, if you want to go beyond your circle of competence, you can. However, please do not jump out before you expand your circle of competence, right? Like what I said before, if you like Bitcoin, for example, please go and read about Bitcoin, right? Find out more about Bitcoin. Become a subject matter expert on Bitcoin before you decided to put money on it. Okay, because ultimately, guys, these are your hard-earned cash. So please don't squander it away, right? People probably spend more time reviewing phones, finding out the specs of this thing, and go through a long process before they invest. But when they come to investing real money, they just throw in 10K, 20K. That's quite silly, okay? All right, Eliza is saying, yeah, the greed index is very high now. It's like 80%, 80K, okay? All right, and what else? Okay, yeah. So having independent thinking. Yeah, so Esther's also saying, wow, I also have people asking me how to buy Bitcoin out of the blue. Exactly, right? Okay. And in fact, I would say there's also like other asset classes, like what Louisa is saying, buying property. Right now, I don't know how many of you are from Singapore, but right now Singapore is seeing a little small bubble, in my opinion, on properties. People are flipping properties like crazy. So please be very selective. All right, no matter which kind of investment class you're going to, just be very selective. Know what you're getting yourself into. Never jump onto the FOMO bandwagon, because if you end up being the last one to leave the bandwagon, you're going to be in a lot of pain. Okay, you're going to be in a lot of pain. Now, Nita is asking a very good question, right? What is your definition of short term? Very simple. My definition of short term, okay, is basically anything between the next 6 months to 1 year. To me, 1 year itself is still very, very short term, right? Think about it. How long do you generally live? You live about 90 years of age, on average. Okay? So 1 year is a very short time frame. It's just about 1% of your life. It's very, very, very short. Okay? So when you want to look out, I would strongly suggest for myself, I always look out at least 3 years, 5 years going into the future. That will help you to make a better judgment, better decision-making process. Okay? All right. Okay, cool. So yeah, so Aaron is saying exactly, right? Safer to invest in our circle of competence. Exactly. Okay. Okay, so let me continue on this. All right. So next one. So one key thing I want you all to do right now is this. Please focus on what is important, because there will be a lot of news out there like this person being overwhelmed. I don't know how many of you are feeling this. Every day there are 101 news articles out there for you to read. If you're all about consuming information, you will be overwhelmed very quickly. Okay. In fact, we have seen so many people that during this period when COVID was still on, right, the market is increasing. They're like, Pete, no, how can you invest? COVID is still here. The vaccine is not here yet. People are losing their job, and all the economists is saying that the market is so bad, so poor. How can you invest? But as they are doing all this deep analysis, quote unquote, the market keeps on climbing. The market keeps on climbing, right? So guys, the thing is this, in the market, there's no such thing as being right or wrong. No such thing, okay? The only thing you need to concern yourself with is profit and loss. That's it, okay? So guys, focus on what is important. Ask yourself, when you invest, should you focus too much on the external news? Or should you focus on what is important, or what are the key distinctions, okay? You need to focus on when you invest. Right? So I just want to share with you guys a few things that I personally focus on. Right? Ask yourself, what drives the stock market? What is the stock market? Okay? So to me is this. In the long term, right? 5 years out, 10 years out. And I think last time there was this article, I don't know if it's still true, and basically they did a study and they took a 15-year time frame and they move it across the whole horizon of investment world. And it was shown that in the US market particularly, if you have a 15-year time horizon, that means you start investing in year 0 and you exit in year 15, and you just shift this up and down from the Great Depression all the way up, there is no single time frame that you will have lost money. Why? Because overall, the long-term market is inflationary. Okay, what is inflationary? That means on average, if nothing happens, all the company don't move, we just stay here, okay, the prices will naturally flow upwards, just like going high tide, water going high tide, right? Now, why is this the case? Why is this the case? Because you must understand, what is the stock market? The stock market is basically a flow of money. Okay? The stock market is the flow of money. When there's more money in the world, it will reflect in the stock market. And we have this gentleman to thank for, right? This is Jerome Powell. His time as the Federal Reserve, he is currently the leading champion in printing cash. During his tenure, we have seen the most amount of money being printed into the market. Okay, next one. We also see, due to him, unprecedented low interest rate. Okay, unprecedented. And Janet Yellen herself also said in her last year's speech, right? She said she's very likely the world, the US, will continue to see long duration of low interest rate as a result of a lot of money printing. Okay, so that is important. Why? Because when it's low interest rate, what does it mean? When it's low interest rate, it means borrowing is easier, and therefore it is beneficial for the businesses out there, right? Businesses, if they are cash strapped, they need to expand, they need to make a better business, they can easily get debt that doesn't cost them too much. So low interest rate is also generally good for the market, right? These are the things you don't hear out there in the news. Why? Because as I'm saying it, I can tell you, some of you are already sleeping, right? Because it's boring as such. It's boring, right? But guys, these are the things that matters in the market. Okay? So understand this. When there's more money flow, it's generally better for the market. In terms of market will go up. When there's low interest rate, it's also better for the market because it's better for business. The stock market is made up of businesses, right? These are not lottery tickets. These are real businesses. The next thing is, of course, right now we are starting to see a glimmer of the COVID vaccine. Now, the thing is this. Some of the companies say, oh, we're going to produce 1 over billion vaccine doses next year. Honestly, I have doubts about that. And even if they produce 1 billion overdoses, how are they going to distribute 1 over billion to the world, right? Okay, that will be the largest distribution exercise in the whole wide world, right? But having said that, what is doubtless in my mind is this. Eventually, this thing will be a reality. It's just a matter of time. Once again, it's because of my infinite optimism about humanity, right? I believe as a species, we'll come through this, we will overcome this either through a vaccine or we'll come through this in another way, all right? And therefore, the sentiment is going to go up, right? Businesses are going to resume because when there's COVID, everyone starts going out again. Good for business once again, right? And therefore, good for the market, okay? So I know this is not the most sexy topic out there. People don't talk about it, right? But remember what is important, or at least to me, this is how I view the market. And so far, it's been quite reliable, okay? And last but not least, I want to show you guys this very simple picture, okay? This very, very simple picture, and it is a picture of a pendulum, all right? For those of you who don't know, pendulum, very simple, is basically a string, you hang a ball at the bottom, and you just let it swing left and right. So what happens is this. Whenever the ball goes to one extreme, it will tend to come back to the center. When the ball goes back to another extreme, it will come back to the center. And this is called reversion. All right? Everything tends to revert back to normal, especially when there is a very violent reaction. Okay? Think about it. If you take the pendulum ball, you bring it up all the way here, guess what? When it swings down, it's going to go all the way here as well. The reaction is going to be equally massive. Equally massive. And this is reflected in the stock market as well. Why do I say that? Think about it. Look at all these crashes. Every time we see a crash like this, for example, 2008, look at how long we run for. Action, reaction. Okay? Action, reaction. Look at this dip. How long do we run for? Another 4-5 years. This dip, boom, end of 2018. We ran for another 2 years. Honestly, without COVID, maybe we have continued. Okay? And now we have COVID, boom. How long do you think we can run for? Now, this is not to say that in the near term, there won't be any form of pullback. Right? Look closely at this picture. There are meaningful pullbacks along the way. But once again, if you're able to lengthen your time horizon, all these would not matter to you. Once again, guys, always have your eye set on the long term. It will make everything better in life, including investing, or at least for me. Okay? And even this year, guys, a lot of people say the market is overheated, too high, too much, crazy. How can it go up so much? But guys, put it into context, right? Put it into context. Look at this. Since the start of COVID crash till today, and this is the S&P 500, how many percent have we gone up? How many percent has the S&P 500 as an index? The US market as a whole, right? 500 companies in the United States. How much has it gone up? It has barely gone up by 7%. This is perhaps one of the worst performing year, all right, given that it's a bull market. We only went up 7% since the start of the COVID crash. So guys, always put everything into perspective. When people are telling you that this run is crazy, look at the facts. Ask yourself, is it true? Or are we just seeing the start of it? Because it's as though the whole stock market did not do anything, all right, for the last 9 months. Almost nothing. Okay? All right. So guys, I just want to give my own opinion going to 2021, all right, how I'm going to invest. The first thing is this: continue to focus and invest in innovation, strong companies that's going to change our life, and investing in companies that you think are going to be dominating in the future. Okay? All right. So this is one category that I invest in, and I call it the disruptor. All right. The next one is please invest in durable businesses as well. So the first category is you want to invest in businesses that disrupt other businesses. Okay? Whereas this category is you want to invest in businesses that will stay this way. They are very hard to be disrupted. They are not just competitive. The key word is they are durable. Okay? And I call this the bulletproof business. All right? They are the business of the yesteryear, true, but it's so hard to disrupt them. Right? Let me give you an example. Like grocery chain. Right? You have Walmart, you have Target, you have Costco in the US. Look at this company. Will they be disrupted easily? No, not really. In fact, the whole COVID shows that when the whole world gets disrupted, this is perhaps one of the few businesses that we still heavily rely on. People had to go there, queue up for long hours just to buy toilet paper. Right? So guys, jokes aside, really, these are the two types of businesses I'll be looking at going forward, all right? Even as I invest for myself or even for others, okay? And of course, as you invest, once again, never forget this picture. While it's always heading upwards in the long run, in the short run, there is going to be fluctuation. Okay, guys, can you type in the word? Okay, just key in F. Okay, just key in F, all right? There will be fluctuation in the market. Please have the stomach for the fluctuation. Otherwise, you'll be committing the worst sin once again. Buying high, selling low. You do not want to do that. Okay? All right. If you don't have the stomach for fluctuation, like what Warren Buffett said, if you don't have a stomach for price dropping, you have no business in investing in the stock market. Okay? And the last one is this. Ultimately, please, please, please have a long-term view. All right? There are only two types of investors in the world: those who invest for the long term and those who don't. Trading is not a strategy in my view. Okay? Why? Because there are so few people in the world that can successfully replicate trading as a strategy. So if you're a genius, you think you're a Mensa 200 IQ, by all means go ahead. But for the rest of us, we are humans, commoners, all right? Trading is not a strategy. So short term is going to really hurt your profits. I have seen so many people. I've taught thousands of students. So really, I've seen enough to tell you that from my own experience, from my student experience, having that long-term view always matters, always benefits more, right? I was just doing a coaching with one of my students, Judy from Vietnam this afternoon. And she told me this year, she did a whopping 500%, right? She was at 60,000 to 300,000. And guess what she told me? She said, Pete, I could have gone to 500,000 because she was doing some calculation. And I said, oh, how? How would you have gone to 500,000? You know what was the answer? She said, if I just sat on my ass and not do anything, right? If she just sat on her investment and not do anything, because she saw the profit at 500%, what did she do? she sold every single thing. She decided that the profit was too much. Okay, so guys, when you invest in strong businesses, be it a disruptor, right, be it a bulletproof business, if you have the stomach for the fluctuation, adopt a long-term view. Okay, Judy's only regret is because she sold too early. But hey, 60K to 300K, 500%, still fantastic, all right? So Judy, if you're watching this, once again, congratulations, well done, all right? Let's keep on doing this, okay? So, last but not least, before I go into any Q&A, is this. Once again, my mantra, make volatility your friend, okay? Many people out there are afraid of volatility. When prices swing, they pee in their pants, okay? Almost said the wrong word, okay? They pee in their pants. But think about it. If there's no volatility, there's no price action, you can never buy anything cheap. So if you're going to invest, all right, have the stomach for the volatility. Okay? All right. Very good. So let me go into some questions. Okay. So Adrian is asking, does long-term mean buy and hold stocks? No, you can do options as well, right? In fact, you can adopt a long-term option strategy as well. Okay? All right, you don't have to just buy and hold stocks. But of course, is buying and hold stock a viable strategy? Of course, okay? Okay, so Hadi is saying, considering a low yield beside equities, is there any alternative in your opinion? So Hadi, very good question. So with the low yield in the banks, all right, some people will say, hey, should I diversify? So once again, it's not about diversification for diversification's sake. You must understand what are you diversifying into. So some people say, hey, let me diversify in property. Okay, so for me, that asset class is something that I'm very familiar, I'm very comfortable. I know the property numbers very well, so I know how to make a property work in my favor. But I've also seen people who jump on property during this current period of a bubble, right? And they buy at such outlandish price. When I do the numbers, I just look at them and say, you might as well keep the money in the Singapore savings, government savings, which is called CPF. That will yield you a higher return than the property on average. So guys, it's not just about, because low yield, therefore I buy other things. It's once again, understand what you're buying. Okay? All right. So Hadi, great question. All right, great question. Okay. So Lam Pinto is asking, are stock valuation important anymore? That's a great thing, Everybody's like, wow, crazy, everything is so expensive. Why don't we? The thing is this, valuation always matters. It's just how you're going to calculate it, right? Is there a limit to how much you can pay for a stock? Of course. But you just need to understand this, right? Why are valuations high now? Because COVID has distinctively differentiated between the disruptors and the non-disruptors. COVID has distinguished between the bulletproof and the non-bulletproof. Okay? And last but not least, with the increased influx of money that has never seen before, does the high stock valuation justify? Does the money justify the high stock valuation? In my view, the answer is yes. Right? When the market has more money, it just means that for every single product, it has a higher price tag. Because now people can pay more for it. That's it. Okay? All right. But of course, I must admit that valuation sometimes is more of an art than a science. Right? So guys, it's not just about timing the market. If you want to get a precise valuation to enter before you can even press the trigger, then you'll be in a lot of pain because you'll be like, I just want to buy this stock at $100, right? I want to buy Facebook when it was at 100 and Facebook keep on going. So when should I go in again? Never stick to one valuation and never change, all right? Always, I was just telling you guys in another session, right? Always look for this confirming evidence. Always be prepared to change your mind. Okay? Always be prepared to change your mind. Okay? Let me see, got any other questions? Okay, I think Michelle has a great question. Michelle is asking, is there a sufficient level of understanding before you invest? Okay, before you invest. And the thing is, this is quite a subjective thing, right? It's really up to you. It's really up to you. For me, it's very simple. I follow the grades, right? One of them is Peter Lynch. And Peter Lynch say, if you can't explain, all right, what the business does with a paper and a crayon, that means you don't understand the business enough. Okay, which I find really, really true. maybe I'm not exactly like what Peter Lee say, I can draw it out because my art sucks, but my version of it is this. If I cannot explain what the company does in one sentence very clearly, perhaps I don't understand the business enough. Okay? All right. So let's go to other question. Bum, bum, bum. Okay, so Winston has a great one. Winston is asking, right? Yes, I've been telling you guys now, greedy times, please be careful. Okay, but we can still invest if our analysis give us the green light. Yep, but we just have to watch the market a bit more closely. No, the thing is this, Vincent, it's not about watching the market. You eyeballing the market doesn't make you a better investor. It does not happen. Okay, wow, when I go so close, I can see all my pimples. Okay, all right, no, it's asking yourself, right now the market is slightly on the high side, right? Do I still have speculative trades out there? If you still do, just be very mindful. You are exposing yourself to a lot of risk. Okay? Now, there's a saying, right? You can light a matchstick in an oil tank and still survive it. True? So long the oil tank doesn't catch fire and explode. But it doesn't make you any smarter. You are still an idiot for doing that, right? So the same thing is this. Can a lot of people right now pile on a lot of risk and still emerge absolutely okay at the end of the day? The answer is yes. But does it mean what they do is safe and sound? Maybe not, because it would have gone the other way very badly for them as well. Okay, so always invest knowing what are your absolute downside and what are your upside, and weigh the pros and cons. Okay, great work. Okay, so guys, there are so many questions, so I won't be able to handle all of them. Okay, all right, there are like so many, like literally so many, right? Okay, I'm sure y'all can see. Okay, so the key thing is this. Okay, Winston, very good. You said my last slide answered your question, so great. Okay, so the key thing is always invest, all right? Not just to time the market, but the more important thing is this, ask yourself, are you investing or gambling? To me, in my view, I know this may offend some people, in fact, some of those investment gurus out there, okay? But in my view, there's no such thing. There is no such thing as trading. Because trading is not investing. Trading is just gambling. There's only two types of people who invest and people who don't. Okay? Those people who trade, they are very skilled gamblers. So if you're a very skilled gambler, by all means, please do that, right? But I can tell you, 99% of us, we are not in that camp. Even myself, I've been there. I've gone through that, okay? I used to do 1 by 1 minute. I used to track the numbers by bits. But I know that strategy way too well to go back again. Okay, so I just want to caution everyone out there, although my long-term view is still pretty positive because I'm overly optimistic about us as human species. However, it does not mean that in the near term, you may not see any pain. So if your time horizon is not long enough, you will be in a lot of pain for yourself. Okay, so I know this is not the best way to end the session, but guys, if you are ready for 2021, you know what I'm saying. I just want to end off by this. Type in the comments 2021. Okay, type in the comments 2021. All right. So, okay, so I think Sean was just telling me that actually this weekend they're going to have a massive event talking about investing and how to thrive in 2021. Okay, so right now I just want to say this is the commercial period. Okay, those of you who don't want to listen can go already. Okay, all right. So there will be an event this weekend called Thrive 2021. Talking about the various things you can look at, not just investing, but health, relationship, psychology, all right, on how to become a better person, not just an investor, guys. Okay, investing is not everything. There's no point investing and get all the money in the world, but you're suffering mentally, spiritually, your health is not at the best state. Okay, so guys, this is the link to Thrive 2021. It's an absolutely awesome event. There's going to be one guy that I really look forward to seeing at the event is actually Nick Vujicic. Okay, you know the guy with like no limbs at all and how he continue to really impact the world. Okay, I really look forward to seeing him. It's my first time going to be at the same event with him. All right, so for those of you who are interested to see Nick Vujicic close up as well, okay, not in person, okay, but it's in Zoom, do go to levelup999.com, all right, and sign up for the Thrive 2021 event. Okay, so that's all I have for you guys. Okay, commercial finish. Okay, so guys, thank you so much. All right, I will return to my family. I'll return to my research. And for those of you who are in the mentorship, I will see you very soon. Okay, see you next time.